Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose, and this video is not an investment advice. So this video is another live trading explanation video of the trading setup which I have shown you in my ebook. Get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be used for Forex and for digital options too. So, which I will show you in the near future. But first of all, before I'm going to talk about the trading setups which I have explained in this ebook, I have to show you the basics, the fundamentals, and that are those one here. The candlestick math. Watch the video about the candlestick math. It's important because candlestick math is crucial to understand what the big boys see, yes, and that is what candlestick about, yes. If you can calculate 3, 4, 5 candles together, you see what the big boys see, and that is always important. You see such kind of 5 candles are together a spinning top. So okay, let me see, and that's the reason why this is a consolidation area. Yes, this is looking like a consolidation area because it's indecision. Yes, so let me see if we can show you some more. This is the part which you have to watch too, because that are the rules for every trade. Every trade should be based on those kind of rules: the trend, the key level, the candlestick pattern, and at least the rejection. And to understand rejection, really, you have to watch this video. Watch this video about how to distinguish a rejection from a market move. Yes, that is important to understand, that you cannot understand the difference or distinguish it from a ranging market. In the ranging market, there are really huge moves which looks like rejections, but in real time it's are only real market movements. So, and then we have this one here, the market condition stuff: weak SNR and strong SNR, strong and weak support and resistance area, and that depends from the market. If you have a healthy uptrend or healthy downtrend, yes, in the healthy market, you can do your reversal trades, your reversal trading setups. And if you have a strong trend, you have to be aware of it, and you can do your continuation trading setups. And that is what's good. In consolidation area, you try to avoid any kind of trades as soon as or till the price will break through one of those kind of areas, yes, this support and resistance areas. Then you can do some trades in direction of the trend. So let me see, and then the video about the trend identification. It's almost important because if you know the trend, because it's one of those parts. Yes, you see, the important is the key level here, the trend, yes, and the candlestick pattern, and all those kind of things are explained in this ebook. So then the trend identification, you know, here the EMAs, you can use the EMAs to identify the trend of the major trend, yes, but for the minor trend you need candlestick patterns, or you have to understand the wave form of the candlesticks and the market. And you see here, and that is only one example, we have here an uptrend which is stalling. Why it's stalling? Because this kind of market here is not creating higher highs and higher lows. And because here we got the first lower low, yes, here was lower low, here another lower, here was a low, and here was a lower low. That means that we are going in a reversal, and that is how you can distinguish it. If a trend is stalling, you know there will come up some kind of retracement or reversal, and that is where we come to the next topic. And the next topic is again the rejection, where I have specified this again because there was questions about this. And you see here we have 20% for the trend, 20% for the key levels, 20% for the candlestick pattern, and the last 20% of the rejection. Then there are missing 20%, and this missing percent are the random factor of the market, because everything can happen at any time. Yes, but if you have those 4 things together, you get 80% success rate. Yes, if you have trend, key level, candlestick pattern, and the rejection all together. So then I have to talk about the breakouts, because breakouts are coming up almost everywhere. Yes, and they are really tricky. That are those ones which gonna fool you, trap you, and that is, if you know them, you can be aware of them, and so you can trade based on them. So, and then we get to this retracement and reversal stuff, and you see there are to understand those kind of trading setups, you have to know a lot of other things too. That is like a gear which is going in together. Yes, you have to get the all complete knowledge about all those things to do your trading setups and to do good trades. It's not only looking for some candlestick pattern, it's not only to watching for the trend, and it's not only to watch for some kind of key level, support and resistance. You have to understand all those basic stuffs, yes, to have a good trading setup. And the last thing is the rejection, which gives the last confirmation, yes, okay, that was this one. And then we have here the reversal and the retracement, and you see in a higher time frame, the retracement could be a reversal, yes, in a lower time frame, and that you can scale down and scale up, and then you understand why sometimes it's a reversal and sometimes it's a retracement. In a strong uptrend, you can almost expect not a reversal, you can expect a retracement. If you have a healthy market, you can expect a reversal, and that is what's all about. So let me see. That was the part about the trading setups, and there can be decided into or changed in two kind of scenarios. The one is the continuation trading setup, that is this one, which you use where the trend direction is the same like the trade direction, and those kinds is from the logic only behind. Yes, the logic is only doing in a strong trend such kind of trading setups. Yes, if you have a strong trend, you can do those continuation trading setups. Strong uptrend, strong downtrend, and here in those kind of reversal trading setups, you can trade them in a healthy market, yes, because there almost the support and resistance areas are working well, yes, and that is what's about. So, okay, that was this one. Strong trend, healthy market, strong trend, and the same for the bull. And then the other one. So let me see if I can show you now some trades based off those things. And here I have first of all to show something else, and that is, for example, this example. Because I have seen the same scenario in the Facebook group. There posted somebody an image of this kind of setup, and this kind of setup didn't work for him. Yes, it doesn't work for him because he was not anymore in a strong trend, because here was some kind of pin bar. There was two candlesticks, which was a retracement of this downtrend, yes, but it was a pin bar, and mostly a pin bar can be a bullish pin bar, and that was the reason, what was a sign for it, that there will be the trend will finish. So, and I'm going to show you now here an example of this scenario here, which doesn't work out, and you see it's worked not out because we have no strong trend. We got here some kind of ranging market, yes, consolidation area, and you see we have here red, green, red, yes, and this breaks this support level. And why does it not work? It works not out because we have first of all a resistance area here, a support area here, yes, and then we have ranging here. You see the EMAs are flat, and that is ranging, and there is no market pressure from nowhere, and that's the reason why we are going up again. So, and then you see we have here another scenario, and that is some kind of, I could say, it's similar to this one here. This one here, yes, you see we have here a resistance area. Yes, we have here a resistance area created by those two candlesticks, and you can combine this, and that are the best of all, if you can combine something like this, for example, with something like this here. Yes, because that is also something like this, then you have a good trading setup, and you see how you can enter immediately into this trade without any kind of rejection, because you have two things together, and that is what confluence is about. You see, this kind of line here is creating some kind of resistance area. This candlestick broke this resistance area, yes, and because this is a reversal trading setup, which you can trade in a healthy market, you can trade such kind of trading setup also in some kind of market with this, because here is no strong trend anymore, yes. And so let's see, I have to mute this. So, and you see it's the same trading setup, and you can do here a put. I have done a put, you see, without any kind of rejection immediately, because I was pretty much sure that this will work out, because we have here, you see, I'm turning around the mouse here around, yes, because I showed that it's a resistance area, and this was also a resistance area here. There's 1, 2, 3 resistance areas, and that's the reason why this worked out. And we have no strong trend. That is an important part. If you are doing reversal trading setups, you have to be carefully that there is no strong trend in case. Yes, that is what is about, because when I saw this kind of, okay, so that was this one. Let me see if I can show you another one. Yeah, okay, here's another one, and this time this is this one here. This here, it's looking a little bit different, but the concept is the same. We have here a continuation trading setup, yes, and I'm gonna show you this. It's directly after those one which I have shown you, yes. That was the same. The same. You see, this was this one what I have shown you, and you see here. You see here. Wait. Okay, after this trade here, we have done this trade here. Yes, that was this one which I have shown you without any kind of rejection. We have here this kind of strong downtrend now coming up. Yes, this candlestick here. Let me do a play. Okay, this candlestick is showing that we have strong downtrend. This kind of wick is creating some kind of support, a resistance area, and we have also the 100 EMA here, and that's the reason why I will enter immediately into this trade. And that is also, if it doesn't look like this yet, but this candlestick is showing you that we have a strong downtrend coming up, yes, and that is what here you have this wick which is on the same high like the 100 EMA, and that is the same scenario like this one. Yes, it doesn't look like this, yes, but this is a concept, and that is what I try to explain you. You have to understand the concept, and then you can apply this to a lot of more. Not only you don't need to wait for or memorize this kind of setup here. Yes, you have only to understand the concept, because it's not always here a pin bar like this was a bearish pin bar. It's sometimes it could be also something else, yes. And you see, that is what I'm trying to show you here. Yes, that the pin bar is looking down. Yes, this wick here is creating some kind of resistance area, because this candle here broke this area, and this candle is telling us that we are heading down. And the overall trend was down, and that was only a retracement and consolidation area to continue the downtrend. Yes, and so let's see the trade. I entered immediately into this trade, yes, and you see how this kind of area here is working like a resistance, and you see how this will go down, yes, because we have here this resistance and also the 100 EMA. That is what I call confluence. Watch the videos about confluence to understand what confluence is about. If you have more than one evidence, yes, and here we have more than one, we have this wicks which showed that this would act as as support level. That support level was broken by this candle here, and this is a strong bearish candle. Yes, not a weak one. This is a strong bearish candle, which showing that the next few candles will go down, mostly 1, 2 candles, depending from the trend, and that's the reason why you can enter immediately into this trade without any kind of rejection. Obviously, if you use a rejection, yes, it's almost better. You can increase the success rate by 20%, like I have explained. Yes, but if this one would be too close, yes, too close to the closing price here of this candle, you can immediately enter into this trade without any kind of rejection, and that's the best stuff. That is what's about. So I would say that was enough. I have shown you that the setups could look also different. Yes, if you look in this you see it's not looking like this. Yes, but the concept is important. Yes, it could be that is what's about, yes, this is what I try to show you here. Okay, so I would say this was enough. If you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, let me know in a comment. So I would say stay safe and bye bye.